Have you been trying to decode the financial statements of Marathon Digital? If yes, you have come to the right place. Today we will translate their Q3 statements into simple words, and we will also compare it to previous numbers to get a clear picture on the company's growth. The Q3 earnings show revenue at 253 million, representing a 92% increase year over year from 131 million, and this beat estimates. Net income came in at 123 million, a dramatic turnaround from 125 million loss in the same quarter last year. EBITDA reached 354 million, reflecting operational improvements. Looking at the year-over-year revenue trends, in 2023 they reported 388 million, in 2024 they grew to 530 million for a 37% increase, and for 2025 they are on track for about 950 million, marking a 79% increase, meaning their revenue has more than doubled in less than 2 years. The good thing about this revenue is that majority of it comes from Bitcoin mining, which means their infrastructure spending has started to pay off. Key metrics include diluted earnings per share, which is a conservative way of calculating a company's profitability per share. Came in at 27 cents, which beat estimates of 25 cents, along with cash holdings of approximately 826 million. To give you a clear picture of their progress, let's look at some quarter-over-quarter comparison tables. I'll pop these on screens for you to follow along. Pause if you need to digest the numbers. On the balance sheet, total assets have been continuously growing to approximately 9.1 billion in Q3, thanks to Bitcoin holdings and operational expansions. Total liabilities are almost 4 billion in Q3, which basically means they can pay all of their debt twice over if it comes to that. The current assets are at 962 million, also more than twice their current liabilities at 459 million, showing good liquidity. Shareholders' equity stands at $5.1 billion, which tells us what's left for the shareholders when all of their liabilities are paid off. Their current ratio in Q3 is solid, signaling strong short-term health, and their low debt-to-equity ratio means they are financing their growth more with equity than debt, which is always a good sign. In income statement, mining drove the bulk of the revenue, up significantly year over year. Gross margins improved with efficiencies in energy cost. Operating expenses rose with fleet expansions, but net income turned positive. Volatility from Bitcoin prices is a factor which can be seen with volatile numbers on their income statement. Moving to cash flow, operating cash flow, which is the amount of cash the company generates from its core business operations, came in at a negative 199 million in Q3, explaining their expansion, which is funded more with equity than debt. They are investing heavily in growth sustainable with Bitcoin treasury. Free cash flow is a negative 284 million. Before we conclude this video, please like and subscribe if this video is adding value. Time for the final verdict. They have a solid balance sheet, but the company being debt heavy and crypto volatility requires caution. Business expansion is good, but expanding way too quickly can be catastrophic, especially if your income is highly dependent on a volatile asset like Bitcoin. Overall, I'm optimistic about Mara's future and the growing AI HPC business they have diversified into. I give this a thumbs up. If these numbers have you rethinking your portfolio, drop a comment with your honest opinion. And if you're interested in watching technical analysis of Mara, click here. Or if you want to watch my full 6-factor analysis, click here. Thanks for watching. I'll see you in the next video. Until then, take care and invest wisely.